America put $285.20 billion into private AI in 2025. Europe put 2025. China, $12.4 billion in private money. The blunt answer is that Europe is falling behind at the frontier. The question is whether it can avoid becoming a permanent customer of American and Chinese technology. The private capital chart is not a complete measure of national strength, but it is a brutally useful measure of who can finance enormous training runs, hire aggressively, and survive expensive failures. In 2025, the United States invested almost 14 times Europe's private AI total. That is not a small handicap, it is a different starting line. The gap is even harsher in generative AI, the layer where frontier labs burn cash on giant models and the computing clusters beneath them. Stanford's 2026 data puts U.S. private generative AI investment at $163.26 billion, Europe $3.2 billion. That is the financial background to every argument about why Europe has fewer global model champions. Money is not the whole race, but it buys a very important input, repeated shots on goal. In 2024, US-based institutions produced 40 notable AI models. China produced 15. Europe produced 3. Counts are an imperfect proxy for quality, but they show the pipeline problem. Europe has excellent researchers, yet too few labs able to turn research into repeated frontier-scale releases. And Europe is not simply chasing a slow China. Stanford now says the US-China model performance gap has effectively closed. As of March 2026, the leading US model was ahead by just 2.7%. The two leaders are converging while Europe is still trying to build enough capital, compute, and commercial scale to stay in the frame. This is a full-stack problem. The frontier is not one clever model. It is advanced chips, reliable cloud capacity, power, researchers, data, distribution, and patient capital. Europe has world-class pieces of that stack. But the pieces are fragmented across countries and companies, while American hyperscalers integrate the whole machine. The startup funnel tells the same story. Stanford counted 1,953 newly funded AI companies in the United States in 2025. Europe had 620. China had 629. Europe is not empty. It is simply operating with fewer shots, less late-stage capital, and fewer giant buyers able to turn a promising lab into a global platform before a foreign company does. And this is why celebrating every European startup can miss the point. A regional champion is valuable. But scale changes the game. More users create more feedback, more revenue buys more compute, and more compute supports more capable products. The US has several companies running that loop at once. Europe needs enough successful companies to create its own flywheel, not one heroic exception. That sounds terminal. It is not. But Europe's counterattack is narrower than the headlines suggest. The European response starts with shared infrastructure. EuroHPC says, the Union has established 19 AI factories and 13 AI factory antennas, offering free customized support to startups and small businesses. That matters because a young European company should not need an American cloud contract just to test an idea. But shared access is a bridge, not a substitute for a hyperscaler scale training budget. Then comes Invest AI. The Commission says it aims to mobilize 200 billion euros, including a 20 billion euro fund for AI gigafactories. The key word is mobilize. This is an initiative and an investment target, not a pile of completed European compute sitting online today. The distinction sounds bureaucratic. In an AI race, it is the distinction between a press release and usable capacity. This is where Europe's deepest habit becomes a risk, mistaking coordination for execution. A continental program can solve fragmentation and improve access. It cannot instantly create power connections, GPU supply, operators, customers, and a culture that funds large losses before profits arrive. The next 2 years will be judged by machines delivered and workloads served, not by announcements made. Still, Europe is not starting from zero. Its strongest cards are real: just different from a generic chatbot race. Mistral is the clearest startup symbol. In September 2025, it raised 1.7 billion euros at an 11.7 billion euro post-money valuation, with ASML leading the round. ASML separately reported an approximately 11% fully diluted stake. That links Europe's best-known AI startup to its most strategically important semiconductor equipment company. It is meaningful industrial alignment, not proof that Europe has built an NVIDIA-scale compute platform. Europe's more defensible opportunity is industrial AI, factories, engineering, energy, healthcare, automotive, and regulated enterprise work. Those customers care about uptime, traceability, language, on-premise deployment, and integration with physical systems. This is slower, less glamorous, and much harder to measure with one benchmark. It is also a place where decades of industrial relationships can matter more than the loudest consumer chatbot. There is another opening: sovereignty. A hospital, ministry, bank, or defense supplier may value control over its data and deployment more than a small benchmark advantage. That does not make regulation a magic moat. It does create a customer segment where European suppliers can compete on trust, locality, and integration, if their products are good enough and their infrastructure actually exists. And that brings us to Europe's most controversial tool: regulation. The AI Act is no longer an abstract warning. Governance rules and obligations for general-purpose AI became applicable on August 2, 2025. Under the May 2026 Political Agreement on Simplification, certain high-risk standalone systems are set to apply from December 2027, while systems integrated into products are set for August 2028. Europe is trying to make adoption legible, but every compliance requirement also asks a small company to spend time and money before it learns from users. The trade-off is not imaginary. In a 2025 Pew survey summarized by Stanford, a median 53% across 25 countries trusted the European Union to regulate AI versus 37% for the United States and 27% for China. Trust can help adoption in sensitive markets. But trust only becomes a moat when Europe can pair it with competitive software, fast procurement, and infrastructure that works. So regulation is neither Europe's savior nor its doom. It can create a trusted market for serious enterprise AI. It can also become a tax on the very startups needed to serve that market. The policy test is brutally simple. Does Europe make compliance reusable and cheap enough that a 5-person company can build, sell, and scale without hiring a legal department first? Now the verdict, and the few conditions that could still change it. Can Europe catch up with the United States and China on the general AI frontier? Not on the current trajectory. The capital gap is too wide, the model pipeline is too thin, and the full stack is too fragmented. Can it become a credible third pole? Yes, but not by copying Silicon Valley line for line. Its realistic path is sovereign infrastructure, industrial deployments, efficient models, and a unified market that turns research into companies faster. 3 conditions decide it. First, deliver AI factories and gigafactories as real, accessible capacity. Second, turn 27 national markets into one market where an AI company can hire, sell, and deploy without restarting at every border. Third, make the AI Act a shared compliance rail, not a maze. Fail those tests, and Europe becomes an excellent place to regulate other people's AI. Pass them, and it can own the high-value industrial layer. The AI race is not a single 100-meter sprint, but it is not a comforting slogan either. America and China have built the fastest general-purpose lanes. Europe's chance is to make a different lane economically essential, trusted AI for the industries that run the physical world. The clock is running. What matters next is execution. Will Europe build a third pole, or become the world's best regulated customer? Tell me which of the 3 tests matters most, and subscribe for the next map of the AI supply chain.